Uh, Perfect. Sir, I would just request if you can on your video for a couple of minutes so that people can at least see your face and identify you. And then when you are start speaking, probably at that time you can switch off the video, if that's fine with you, sir.
Yeah, that's fine with me. I don't mind, but I'm not sure of the bandwidth. So let me just try that.
Correct.
So this
Great.
is, I'm Kamlesh here.
Yes, we can see you and hear you both.
Yes, thank you so much. Thanks. That's good. I don't know how long will it hold, but I'll be happy to keep it on. Anyway, most of the time will be for the slides to be on the screen.
Correct. So I think we can start the session. So just to give a background, sir, this is the first time Ahmedabad branch of Institute of Chartered Accountants of India has conducted this detailed session on gift city and opportunities in IFSC. We have had more than 500 people have registered for this event, and close more than 350 had attended the session yesterday. And all thanks to our chairman, Mr. Harit Dariwal, who is not present unfortunately, and the rest of the committee members, because of some elections going on and code of conduct is that. But rest assured, sir, that this is one of the most awaited sessions of this year, because we are seeing the other side of the, I would say, establishment of a unit in IFSC. We are seeing the other side, the other perspective. So just to give a brief introduction of our today's speaker, Mr. Kamlesh Sharma, sir. So, sir was a part of Reserve Bank of India from he joined in 2004 to October 2020. Currently, he is on a deputation to IFSCA, International Financial Services Center Authority, which is the new authority set up under the IFSC Act at Gift City, Gandhinagar. He is on deputation from RBI. His main role is involving making proposals related to interpretation of FEMA and formulating appropriate policies and regulatory as well as supervisory framework for banking and related businesses in international financial services centers in India. He is also involved in the regulatory areas related to finance companies, aircraft leasing, international trade finance services, regional corporate treasury centers in IFSC. Prior to joining IFSC, sir was a part of Reserve Bank of India Foreign Exchange Department from Jan 17th October 2020, where he was in charge of the policies related to ODI, overseas direct investment, and dealing with policies and procedures for compounding of contraventions under FEMA. Sir has been a voracious speaker, I would say, and he's an excellent orator. We have attended, I was personally have attended sir's many sessions, and his clarity on the subject of FEMA is absolutely amazing. So it is wonderful to hear from today's speaker on the topic of IFSC. And before I conclude, one interesting snippet, which I am sure most of the people are not aware, and even I was not aware till date, is that sir has played cricket at a national level. So we have a great cricketer who is going to conduct today's session on IFSC, and is also on the All India Cricket Umpire Panel of the BCCI since 1997. That's more than 20 years, 25 years to be precise, that sir is officiating in the cricket matches. And I'm sure with the kind of batsman sir is, this session is going to be a master blaster session with 4s and 6s all throughout. And believe me, sir, that there is no one in today's session who will say that it's time for a break or a time for a lunch break. That is the kind of session which we are hoping, and which I'm sure it will turn out to be today. So with this, we welcome you, sir, for today's session. I'll request all the speakers to welcome sir. And I would, from today, we will hope that today is just the beginning of our association. In this coming year, we will hope many such sessions from you, sir, on different topics of IFSC, FEMA, and other related topics, which are of your comfort, so that we can enrich ourselves, the branch and its participants can enrich on this topic. With this kind words, I request you, sir, to take the session and start the proceedings. And one more thing, sir, before you start, I would request all the participants, other than sir, to please switch off your videos and keep yourself on mute. With this kind words, I request you again, sir, on this session, and over to you, sir. We are looking forward to an interesting journey. Thank you, sir.
Thank you so much. Thank you so much, Soumya. That was more than a kind introduction. Actually, I didn't realize that when you wanted some sort of a brief CV, I just gave the most updated one. And actually, it's always a pleasure to be talking from the regulatory side with the kind of audience when the members of ICI, the practitioners. So as you would have heard me earlier also telling that it is not that it is a one-way direction flow. It is always more important for the regulator maybe in today's world to understand the practitioner side, that how the business is looking at your regulations and what are the kind of enabling provisions that may be done so that the business actually flourishes, because regulators cannot afford to just exist on their own, because they exist because there is business and the business has to thrive. So that is one point. Number two, yeah, about the cricket part, because I was not that great a batsman, not definitely not a master blaster, but my present role when I'm doing some umpiring, whenever I get some time, I don't get time as much as I would have wished. But yes, because I stay in touch, so even in the role as an umpire, no, sometimes you are actually dealing with the application of rules and regulations. How do you control the players? How do you control the match? And of course, you have to get the right decisions. So I'm very happy to be here, and I am always open for any such interactions, even in future. And I hope that this session is actually useful. But at the outset itself, let me just point one thing out, that I have just conceived this as from my perspective, and you will not know that as players also know, we have some habits which don't die easily, right? If somebody has a tendency to hook up a short pitch ball or play outside the off stump, however much one may try, but still the tendency is such. Though, so my presentation may sound like too jargonish or too much of regulatory or legal side. But then I realize this, that the emphasis here for the members and all those who are together today for this session, they are looking specifically the solutions in terms of practice, that how do we do this. I'm not very sure at the outset whether this session will give them answers straight away or the ready-made answers, but I'm open to discuss. So even for question answers, you may come during the session or maybe at the end of it, because a few members had actually just contacted me maybe a bit late, but they wanted whether I could touch upon a certain aspects. Now I will leave up to the members, and I have tried to make it very extensive, because see, this kind of audience, it's not easy to find, because I believe that ICI members and the institution itself, it is a mark of quality that you can always expect, that people who have these two letters in front of their name, CA, they just stand out for their professional commitment and depth of understanding. So that is why it is a very good opportunity. And so let me just start with my presentation. I'll start sharing my screen. Is it visible?
Yes, sir. It's visible.
Yes. So this is I'm again once again very much grateful to be here, actually, to Soumya and other members, including the president of the Ahmedabad branch of WIRC ICI, to actually consider me for becoming a part of this excellent idea. I'm not too sure about that whether you are actually it is also about only fintech, but then there's so much happening. And because Ahmedabad branch of WIRC is right in the center of the action, so of course we expect that they would be looking to play a much bigger role, and because of the proximity, if not for anything else. So this is how I have decided that, okay, this could be the coverage, that because I have kept it that one part is about FEMA. So when we are talking about how the first half of the presentation or the session is, we will be talking mostly about FEMA. Again, we'll go to the conceptual issues And then maybe because most of you would be dealing with the practice things, you can come up with the questions. But my idea is at least to throw up the conceptual aspects and the issues relating to the interaction of FEMA with the business in IFSC. So mostly the legal side, what are the regulations and such things. So we will be covering most of the issues which will be say covered under implications of FEMA for IFSCA or IFSC, business in IFSC. Of course, the caveats would be very important. I will come to that. And then this later part of the regulations, I am not sure how much detail I should have gone into when I'm talking of banking regulations, especially for this audience. But then still I thought, because we have gone ahead, I wanted to give a flavor that how even the regulation approach, the approach to making regulation is going to be slightly different in IFSC. It's not slightly different, it's going to be very different. How we justify ourselves as that we are in an international financial center now. It's not the country India, or the regulations are not being made for the whole of India, the complex country, the complex, the excellent, the glorious country we are part of. But when we have carved out one area as GIFT IFSC, what kind of rules we are capable of making, and can we actually implement and get the best out of them? That is the idea for the second part, when we will be talking about the banking regulations, how we have evolved. So this is about the agenda slide. And then the most important one, the caveats. Of course, the views are personal. As a regulator, I tend to speak a bit more of my mind than generally is associated with the regulators, because regulators are known to be tight-lipped. Central bankers definitely don't speak when they are supposed to or expected to speak. They may speak when there is some sort of, say, an occasion where everyone knows what is to be spoken. But so I am putting this in front, that nothing here can be taken as that, okay, this is what IFSC is going to do, or this is what RBI, more importantly, because right now I'm on a deputation from the Reserve Bank and I'm supposed to go back to RBI whenever that happens. We should be very careful. And of course, this is a responsible body of chartered accountants here. So they understand all the implications here. And then second part is that a lot of things, because I was mentioning about the challenges in actually dishing out some ready-made solutions to the practice problems, is also because even the law or the regulations themselves are evolving as everyone is trying to understand better that what are the needs and how best we can actually make this a big success, that including at the Government of India, at the Reserve Bank, at the IFSCA, and even other agencies. So most of these issues, actually not some, most of these issues are under discussions at a very high level. And but then the objective is same. Everyone has the same objective. I'm sure Sandeep would have talked about yesterday about GIFT IFSC and how it has taken, because we have already traversed some a fair degree of distance, especially after the enactment of IFSCA and the establishment of IFSCA. Things have really moved fast. Now, as far as specific disclaimer with regard to references to FEMA, we have to be, that's what one, I have not gone too much in detail about that, how exactly, what is the most updated version of this particular notification, because the references are only for examples, only for illustration purposes. So definitely you should not be taking any of this as a reference that, okay, this is how it is today, because as you would know that a lot of changes have happened. I have just taken a few of the slides, maybe just for the reference or the example purposes, nothing for the technical discussion on the same. And then one major business related caveat about whatever we may talk here, we have taken care of actually putting it in, even in the regulations, that whatever transactions which are taking place from IFSC where a resident entity is involved on the other side, and we will of course come to resident entity, and we all know, but we'll go to the details and the depths of this, because there are huge implications of these definitions themselves. So wherever a resident entity in domestic India or the DTA India, as we may call, is involved, then that resident entity's business will be completely subject to compliance as applicable with the regulations as applicable on them. So an IFSC entity may be a non-resident entity under IFSC regulation, but when it is dealing with the Indian entity resident in India, then the FEMA provisions or regulations as applicable on that resident entity, of course, it is the responsibility of that resident entity, but even this entity in IFSC, because it is again an Indian entity, so it has to be conscious of that we should not be contravening any of the FEMA provisions as applicable on the domestic side, because there may be some sort of an overlap, some gap here, because Reserve Bank, of course, continues to have that kind of jurisdiction over the resident entities business. So let's start with just this preamble. I thought that if we are talking of FEMA, only underlying part is that the FEMA is all about, as you may see, that it is about how do you facilitate more and more of external trade, payments, and the orderly development and maintenance of foreign exchange market in India. Now, this is the whole thing, because you know that IFSC is in India, but it is still outside India in the technical sense. So FEMA, when we talk of FEMA, there is the whole preamble itself that it is about development of foreign exchange market in India. Now, in that sense, IFSC is also in India. So the development of foreign exchange market in IFSC also is not beyond the purview of FEMA in one sense, but at the same time, on the operational level, it is actually when FEMA was enacted or it was designed, nobody would have thought or imagined at that time that we will have an IFC in India itself. So that is what we have to appreciate. And that is where most of the challenges come in today's time, when as we are talking, that we are trying to interpret the act which was meant for just one whole India. And now suddenly we have carved out some territory and we are now designating it as something which is offshore. And then we are applying the same rules. So that's what we makes it interesting and also very challenging. Not much here. We know that FEMA is more of management oriented. It is more of a facilitating legislation as compared to FERA, which it took over in 2000. Right. So the emphasis in FEMA was that it will be about RBI will lay down the regulations, and then there will be a very limited, say, role for giving approvals and also whatever transactions are permitted under current account, everything is permitted unless it is prohibited expressly. And under capital account, everything is prohibited unless it is expressly permitted. So that is how we are in terms of rupee, because rupee is not fully convertible on capital account. But rupee is fully convertible, so to say, almost on current account. So this is just to tell again. Yes, yes. Any question, any point? Okay, I'll carry on.
Sir?
Yes,
Yeah.
please.
Yeah, sorry, just to make a point. Yeah, what we can do, sir, that we'll take all the questions at the end once you complete your session. In that way, probably it will be better that you can answer all the questions right at the end, if that's fine with you, sir. I think that will help. In fact, that's a very good idea, because maybe if a query comes, maybe I would be covering somewhere anyway in one of the slides. So I think it's a good idea that after having seen all, after we discuss and cover all the points, then whatever questions there are, we can take them all at the end of the session. No problems. That's a good idea. So again, I'm just highlighting of the few points in red. That's all is important for this, that the FEMA provisions are dependent on the residential status. We'll come to that. And it is, of course, as you know, it is not exactly same as covered under the Income Tax Act. Now we come already that whether FEMA is applicable, should it be applicable in IFSC? Already let's get into that. So I'm raising questions which we will be answering if there are left any questions unanswered. But see, the FEMA is applicable to the whole of India. Now, this is in 99 when FEMA was designed and it was implemented in 2000. Now, the whole of India, now GIFT IFSC is in India. So it is applicable, isn't it? Now, it is also applicable to any branch, office, and agency which is situated outside India, but owned and controlled by a person resident in India. So even if you would say that IFSC is maybe geographically GIFT IFSC is in India, but then technically we are treating it as an offshore center. So it is deemed to be outside India. But even then,
all the branches, offices, and agencies of Indian entities, that is, those controlled by a person resident in India, are still under FEMA. Okay. So, and as we know, the FEMA gets triggered only when there is a transaction between a resident and a non-resident. We'll come to these definitions. You may think that it is just repetition of the Act provisions. Why is this important? But believe me, these are important. If we get some critical thinking going on these points, I am very sure that then you can apply all your practical experience and understanding and the case examples to maybe sort out whatever practical issues mostly arise. So some very important key concepts under FEMA which directly relate to the business in IFSC also. First is the authorized person. Now under FEMA, the definitions are covered under section 2, and an authorized person means an authorized dealer, money changer, or whatever banking unit or any other person for the time being authorized to deal in foreign exchange of foreign securities. Right. Now, even an offshore banking unit may be an authorized person. But we have to understand that what is it meant when we say that these authorized persons are permitted, only they are permitted to deal in foreign exchange of foreign securities. We'll come to that. So because why this question? Because we will be asking it, say in one of the later slides, that whether this is important for IFSC. Then capital account transaction, we understand this, there's nothing new. Why it is important is also because when we talk about LRS, then it becomes a bit more important. We'll come to that. Current account transaction, we understand. We also understand because IFSC is essentially a special economic zone. So the export-import concept. So under FEMA, export means taking out of India, then or provision of services from India to any person outside India. So outside India, but within India, we understand that aspect because it's an SEZ. So what is deemed export or deemed import? So, but for most businesses in IFSC, all these will not make any sense. Any sale from IFSC of services to India or to whichever part of the world, it is a sale from IFSC. Now, whether it should be counted as import into India of financial services, that is a separate issue, and how the statistics or national statistics or the exchange means how do we count, whether that will be be counted for our current account deficit. Those are the issues for other agencies to take care of. But what is more important is, again, the definition of who is a person under FEMA. We are talking of all this leading to this. Now, a person resident in India is defined like this. So it includes the basis of stay as well as the purpose. So even if somebody is staying only for 60 days in a particular financial year in India, but the purpose is that he is here for some employment and for some uncertain period. Okay. Then also it's a person resident in India under FEMA. But more importantly for us, a person resident in India would include corporates registered in India, offices, branch, agencies in India of a non-resident. So even a non-resident or non-resident entity's branch in Mumbai is a person resident in India. Similarly, a New York branch or New York office of a Mumbai company is also taken as resident in India. So that is the coverage of the person resident in India. You can imagine now that everything which has got a controlling interest or something under a resident entity is taken as a person resident in India. And everybody else who is not covered under this definition, under FEMA, is taken as a non-resident or a person resident outside India. Now, what does it mean? So here the question comes that if entities in IFSC, GIFT IFSC, are set up by Indians, whether they will be taken as resident entities or non-resident entities. We'll come to that. We'll come to that how. So I'm just telling you that what are the implications, or what are the provisions in FEMA which have a direct implication of bearing, which need to be understood very clearly before we try to address issues related to business in IFSC. That is the whole purpose of these slides. I'm continuing with the authorized person. I'm going back actually, because just to emphasize that it is the RBI which has got the power under the FEMA to authorize a person to be appointed or to be known as the authorized person. Because as you know, the entire FEMA, the implementation of FEMA is actually resting upon these authorized persons, that they are supposed to ensure that the purposes for which foreign exchange is being taken by any entity in India is as per the permitted clauses under FEMA. It is the authorized persons, as we call. So, and who is appointing the authorized persons? It is the Reserve Bank's power that it will be appointing anybody as the authorized person. Then only it can deal in foreign exchange of foreign securities. And as we all understand, for every foreign exchange transaction in India, again, I'm talking, when I'm saying in India, it is in India minus IFSC for the purpose of our discussion today, this evening. The authorized person, one of the parties, at least one of the parties to every transaction involving foreign exchange, as defined in Foreign Exchange Management Act. Foreign exchange itself has been defined, foreign currency and whatever else. There has to be at least one party which should be an authorized person as appointed by or as designated by the Reserve Bank. You cannot have two entities entering into a foreign exchange transaction when none of them is an authorized person. So I and Soumya cannot get into a foreign exchange that Soumya has a lot of dollars. He simply cannot give it to me. I cannot buy it from him. I cannot give him rupees even if I am taking the market rate, because that will be illegal. You may be aware of that. So this is the importance of the authorized person concept. And it is the RBI which has the powers to appoint them, to issue directions to them, to take, to inspect them, even to take, say, punitive action against them if there is any contravention of direction. All this story about RBI's power only to tell you, only to bring the attention to the fact that after the enactment of the IFSC Act 2019, the powers of the Reserve Bank along with other regulators under respective acts have been transferred to the IFSCA, the International Financial Services Centers Authority, as far as they are related to financial products, financial services, and financial institutions in IFSC. So FEMA happens to be one of those acts which find a mention in Schedule 1 to the IFSCA Act, under which the powers which are exercisable by the Reserve Bank in the rest of the country, only for the IFSC, because as on date we have only one IFSC, that is GIFT IFSC. So only for GIFT IFSC, those same powers under the FEMA are exercisable by the IFSCA. Now the question automatically will come whether the IFSCA can appoint an authorized person in India or can it appoint in IFSC, and what would be the understanding or what would be the meaning of that authorized person. Essentially, because we are talking of FEMA here, we have to understand this, that these authorized person, why are they say appointed and why are they controlled in such a manner? Because foreign exchange is a precise resource for the country. So we have to, it's no longer the FERA days that you are controlling the use of this thing. So for any import, you can use any amount of foreign exchange as long as you're importing something which is not prohibited. Right. So there is not so much of a control, but management is still very important, that you manage your foreign exchange reserves, because we still operate in a very uncertain global volatile world, financial world, where we have seen what happened, the kind of havoc that was created in different crises, and of course the global financial crisis. So the management of foreign exchange reserves and foreign exchange markets and the volatility, the exchange rate is one of the most important mandate or the function of the central bank of the country or the monetary authority of the country, that is the Reserve Bank. So even now see the authorized person, so we want to control, I'm using the word control, you may replace it by manage. So we want to allow only for certain specific purposes where you can give rupee and buy foreign exchange for whatever purposes. So that's why this authorized person is required. Now, when we talk of an international financial center where you cannot undertake any transaction in INR, you have to necessarily deal in freely convertible foreign currency only. There's no question of any INR, any rupee. So can there be any relevance? We'll be telling that. We'll be taking them. So these are different types of authorized persons. Just to get in detail, you to think that you are aware there are some EDI category 1 banks. So these EDI Cat 1 banks are very important. They're all in India. So all commercial banks, even state cooperative banks, urban cooperative banks, which are permitted to undertake any current and capital account transaction as per RBI's directions. Then we have these full-fledged money changers or some restricted, which of course now we have only FFMCs. Then we also have some other types of entities under EDI Cat 2, including Exim Bank, some select financial and other institutions. And then we have FFMCs, which can only purchase foreign exchange from entities, and only for two purposes: the private visits and business visits abroad. They can even sell foreign exchange again to all people in India. We are talking of in India. So there is no question of INR in IFSC. So whether there can be any relevance of the concept of authorized person in IFSC is one issue. So that is already one of the implications. So that's what I am talking about. Now, we already talked about this, that what happens, there is a definition under FEMA which tells that all entities which are say managed and controlled, which are branches of Indian entities, are going to be person resident in India. So the Reserve Bank of India actually came out as with a separate regulations. It's called FEMA 3339 in 2015, March 2, 2015. The Reserve Bank of India, first time when the GIFT IFSC had to be operationalized. So the Reserve Bank of India had to first operationalize because there is a business and in foreign exchange. The angle of foreign exchange business is coming up, and for that the Reserve Bank of India has the powers. So it had to first notify, yes, that is permitted. So this FEMA 339 is till date. Is the till date under FEMA. This is this 1 page or 1.5 pages regulation is the underlying, is the most foundational or fundamental type of regulation. So what is it telling? It is actually going and telling that any financial institution or branch of a financial institution, this is all again India. Financial institution could be an insurance company, could be a bank, could be a securities market, a broker, or maybe an exchange or whatever, which is set up in IFSC, that is permitted by the government of India under the SEZ Act, that is GIFT IFSC, of course, or any regulatory authority. And that regulatory authority today is IFSCA. At the time, the respective regulators were there. Then all these entities in IFSC shall be treated as a person resident outside India. So already there is an exception. When you look at the FEMA definition, you can easily see that this is the provision that has been made only to operationalize business in GIFT IFSC. Then it goes on to tell that these institutions shall conduct all businesses, all the permitted businesses in foreign currency with such persons, whether resident or otherwise, as the concerned regulatory authority may determine. So in the beginning, in 2015, as you would see, RBI, SEBI, IRDA, they had given out their separate guidelines for the respective business areas, that what the insurance companies can do, what kind of policies it can sell to resident entities, or for that matter, stock exchanges, what kind of securities they can trade, what kind of products they can have. So all these were given by SEBI, and RBI had, of course, given the guidelines on what kind of banking business and how banking units can be set up. But now today, this concerned regulatory authority today is the IFSCA. Now, let's continue on FEMA 339. The red part is what we have already talked about. But look at this. The first part is very important because it is telling that in FEMA 339, the RBI regulations are telling that nothing contained in any other regulations issued under FEMA shall apply to a financial institution or branch of a financial institution set up in an IFSC. So except for FEMA 339 itself, nothing else will be applicable on the entities in IFSC, except when the Reserve Bank of India or except when IFSC itself wants to apply something. Otherwise, the default state is that nothing else is applicable. So when you talk of ECB, when you talk of FDI, when you talk of anything else. So because it's almost like FEMA is not applicable for entities doing business in New York or Cayman Island or Mauritius. Similarly, it is not applicable here in that sense in IFSC also. But again, the caveat, you go back to that, insofar as these entities are doing business with resident entities, then the provisions applicable on the resident entities will have to be complied with. That's what. See, here I wanted to bring in the reference to LRS in the beginning. So here means under LRS, you means this FEMCAT, the current account transaction rules, they allow that you can send money abroad. You can send foreign exchange. The individuals from India, the resident individuals from India can send foreign currency or foreign exchange abroad. For what purposes? Private visits to any country, of course, except Nepal and Bhutan. They can send gift, they can send donation, they can send money for going abroad, for employment, immigration, even for medical purposes, right? And some even to acquire. These are the current account transactions, means buying services or buying goods. But even for capital purposes, with some restrictions or limitations, the individuals are permitted even to acquire foreign securities. We know that. We'll come to those things. But LRS is also under FEMA. So because LRS is applicable on resident entities, so that's why they are applicable they are bound by that. They have to comply with them. Now IFSCA has told that anywhere, anybody from the world, anywhere sitting in the world, anywhere, anyone sitting anywhere in the world can send money here if they want to invest in foreign securities here. Now that anywhere from the world covers India as well, isn't it? But when somebody sitting in India is trying to do this and you make use of this IFSC business opportunity, then they will have to comply with the FEMA requirements applicable on them. That is a small point on this. Now, just a small point, we have to know, nothing directly related here, but we should know this, that there was a big change proposed in Finance Act 2015, which was notified much later only in 2019. And where there was some change in terms of the capital, what are the regulatory powers of the Reserve Bank and the central government of India when it relates to either the debt instruments or non-debt instruments. So now, actually, after 2015 Finance Act amendment notification, now all debt-related investment or instruments are under direct regulation of the Reserve Bank. So the Reserve Bank will come out with regulations of this debt, anything to do with the debt instruments in consultation with the Government of India. And for the non-debt instruments, that is all equity or capital sort of direct investment, there the rules will be framed by the Government of India in consultation with the Government of India, the Reserve Bank of India. And these non-debt instrument rules, which actually replace the FDI regulations, FEMA 20, are an example of that. It's just a passing mention because we should know the important changes which have come in FEMA when we are talking of implications of FEMA for IFSC as well. Now, this is a listing. Again, this is what I was actually referring to when in one of the caveats, that it may not all be updated one, because there may be some changes there have been some restructuring, some FEMA 3R, like FEMA 3R has been issued where FEMA 3 and FEMA 4 have been both subsumed in that. But the idea is that you can just look at the kind of regulations there are under FEMA, which are applicable on entities in India when they undertake their foreign currency business with the world outside. So ECB regulations, FEMA 3 and FEMA 4, which are now under FEMA 3R, are ECB regulations. So these are also going to have implications for the business in IFSC. Even FEMA 8, the FEMA guarantee rules, regulations, what kind of guarantees can be issued by resident entities in respect of, say, the borrowings of their branches or their subsidiaries. So that is also an important one. So we have to be aware. We have to really be aware about that, what all different regulations are there. Then we can take a better informed decision that, okay, what could be the implications of these for business in IFSC? That's why I've listed down, nothing much beyond that for this. So foreign currency accounts by a person resident in India. Now FEMA 10R tells that what kind of foreign currency accounts, for what purposes a person resident in India, maybe individual or corporates, whoever is covered under that definition of person, what kind of foreign currency accounts it can open outside India. For that, so IFSC also is outside India, so we have to be aware about that. Similarly, what is the manner of receipt and payments when you are making from India, from Mumbai or from Ahmedabad to Gift City? in IFSC, what is the manner of receipt and payment? Can you make payments in INR? Or can you receive payments in INR from Gift City? Those are the kind of issues I'm talking about. So I'm just, the list is going off. This last point here in the previous slide, actually FEMA 20, this violet, this thing is, it's no longer there because it has been replaced by the non-debt instrument rules of the Government of India. And of course, the corresponding regulations of the Reserve Bank. FEMA 120 is the regulations that deal with the overseas direct investment from India abroad. So the Indian companies or Indian entities investing abroad, direct investment or portfolio investment, or maybe even residents setting up companies outside India for whatever purposes, including for financial services, then this FEMA 120 is still the operating regulation. So we must be aware. This is one area perhaps Mayank and a few of your other colleagues may already be dealing with them. So this is an important notification in that sense. Even FEMA 339 is the regulation, of course, under FEMA, and some of these other things. Now, this listing is, you need not be too concerned about this. It is just to give a flavor that what are these different regulations. So we may have to, so you never know what particular transaction by one of the entities may trigger some provision in one of these regulations when it comes to IFSC. Right, that is the whole idea, because financial services ODI, that's why now I'm picking up something which as an example that is directly related, and that is the overseas direct investment regulations, FEMA 120. As you may say, see, the regulation 7 of this FEMA 120 deals with overseas direct investment from India in financial services sector. And IFSC is essentially about financial services. So whenever a resident entity is trying to set up a joint venture or a subsidiary in IFSC, then they have to directly deal with this, and that is where the issues come. And because these ODI regulations have been made only for the rest of the world, it was never conceived that there could be ODI from India, within India, but still outside India, like GIFT IFSC. That's why we are already in some discussions and with the Government of India and the Reserve Bank, and actually everyone is on board and there is a lot of understanding going ahead. So we are looking at getting some more clarity and some more simplification, especially with respect to the ODI from India to GIFT IFSC. And very soon we are expecting that something good will come out on this. So these are the requirements as on the date. Till we get anything amended or some new revised regulations, we have to deal with this. So the ODI in financial services sector, there is requirement of registration with the appropriate regulatory authority in India. Then there has to be some profit track record. Then approvals from the particular financial sector investment of the regulatory agency, both in India as well as abroad. And for this abroad, for IFSC, it becomes IFSCA. So the IFSCA should also give an approval to the entity which is desirous of setting up a subsidiary from India here. So both, if it is say coming under SEBI's purview in India, then SEBI should approve it from the domestic side, and IFSCA should also give approval from the IFSC side, that is abroad here for the purpose. Now, one little thing about this FEMA 120, we must not forget that FEMA 120 is not just about overseas direct investment or setting up of entities or subsidiaries in outside India or in IFSC. It is actually dealing about acquisition and transfer of foreign securities by persons resident in India. So we have to be aware of this, that an individual can also acquire a foreign security even as a gift. Then also FEMA 120 is applicable on him. Again, I'm talking of India. When I talk of India, it is Mumbai or Ahmedabad, but I'm excluding GIFT IFSC or GIFT IFSC from that India. So even one can inherit. That also doesn't mean that it is nothing to do with the FEMA. It is still under FEMA, and that's where the LRS limits are applicable whenever a resident is individual is making a remittance from India to outside India, including IFSC. So this sending remittance is subject to LRS limit, but what is the purpose of that remittance? If it is resulting in acquisition of foreign securities as permitted under FEMA 120, then that also will be required to be in compliance with that FEMA 120. Similarly, another example, when you're someone is trying to open a foreign currency account, I talked about it. So if someone sitting in Ahmedabad, they just want to open an account with an IBU, the IFSC banking unit in IFSC. So whether they can just open a foreign currency account or not. So as IFSCA, I have put in my regulations that you are free to come and open foreign currency account here. But for me, there's no difference between my CA friend sitting in Ahmedabad or anywhere in the country and the rest of the world. So my regulations are country neutral, but the person who is coming here has to be in compliance with the regulations or rules applicable on them. That's what I'm talking about here. So the FEMA is telling the persons resident in India how and for what purposes they can open foreign currency account abroad, including IFSC. So these are the legal angles. We have talked about it. This is just summarizing. This is summarizing that IFSC is set up under the SEZ Act. Reserve Bank of India notification is applicable for this IFSC. FEMA 339 has given certain exemptions that all these entities in IFSC will be taken as non-resident entities under FEMA, and nothing except no regulations except this FEMA 339 will be applicable on these entities in IFSC. So what is the purpose? Now I'm just already using the term IBU here. IBU means IFSC banking unit. We'll come to that in detail if you want. But this is any banking entity in IFSC and how it is separate, even if it is a branch of an Indian bank, how it is separate from any other branch. It is unlike any other branch of SBI. SBI Ahmedabad or Vastrapur, or maybe just outside GIFT IFSC or in the DTA, it is different, very different from the SBI's branch, which is called the IFSC banking unit in GIFT IFSC. Its balance sheet can only be in a foreign currency. As of now, we have specified that it has to be USD. It is not allowed to operate in onshore markets and domestic payment systems. As of now, it cannot just make any investment in Indian money market. Okay, so it is the ring fencing under FEMA angle. There is no deposit insurance for anybody who is opening a foreign currency account. It cannot go and seek any protection under DICGC that up to 5 lakhs rupees or equivalent of. No deposit insurance. It has to maintain separate nostro accounts with its correspondent banks. So SBI Bombay's USD account with, say, JP Morgan Chase in New York cannot be used by SBI's IBU in IFSC, although it is already dealing in USD, but it will have to have separate nostro account just to keep the separation, the ring fencing. And the restrictions on LRS transfers to IFSC. As you will see that actually the Reserve Bank had not at all permitted till February 2021, Reserve Bank of India had completely prohibited any LRS to IFSC from India. But in February 2021, they came out with a circular that we will permit only for the limited purpose of investment in securities issued or in traded in IFSC. And then there were some other conditions also attached to it. They are still applicable, but again, we are discussing with the Reserve Bank and we are trying to find some sort of a solution or some sort of a fair treatment for IFSC, if not a preferential treatment. But the idea is that at present, the condition is applicable that within 15 days, if somebody is sending dollar funds under LRS to IFSC, so they may be sending to their foreign currency account maintained in IFSC with a bank in or IBU in IFSC, then within 15 days, they have to actually make investment in some security or whatever product in financial product, permitted financial product in IFSC or anywhere in the world. They cannot simply keep dollar balances in their IBU accounts. That is the idea. That you simply cannot convert your rupee savings into dollar savings. That was the idea. But we are looking at that 15 days is too stringent and it is not applicable on the transactions in other jurisdictions. So if somebody can send dollars to Mauritius and can happily sit together for even 2 years, 5 years, if there is no condition applicable on them, then why should it be applicable selectively on IFSC? That question is being addressed and the RBI is also thinking and is on board. They are trying to find a solution. Just to give a flavor of that, what are the kind of issues on the regulatory side. Now we come to IFSC, that what is the purpose then? Means we know all those things, I think everyone here present today, this evening, is aware about this. Maybe Sandeep would have talked about these things anyway. So what is the purpose of setting up IFSC and then get into these complications about FEMA? Then there is definitely the purpose is to actually leverage the huge economic advantage from the growing, fastest growing economy in the world, that is our economy, and to reduce our dependence on the foreign entities for providing international financial services to Indians, to Indian corporates. So when a Reliance or when an Adani or a Tata, when they raise their ECB or when they make some investment abroad, who is actually providing them the consultancy or providing them these services? Who is advising them? It is mostly entities sitting in Singapore or Mauritius. And all those entities, you may all be aware, may be manned by CAs like you. So means everything is being done by Indians for Indians, and then why shouldn't it be done out of within India? Why should we be spending our foreign exchange only to get those services which we know the best in the world? Traditionally, we have always knew that. That is the idea. So we have the IFSC where you will deal in all transactions which are not involving rupee. So unlike domestic transactions where only rupee can be used, here everything except rupee can be used, and that except we have made that it should be fully convertible foreign currency. And it is also to cater because the demands or the requirements or the objectives of domestic regulations or domestic law or legal system or the economic system or the financial market system is different, because it's a large economy, diverse segments. So the objective would be, or the premium would be on the objective of customer protection, say, because a poor man should not be losing his or her money when a bank goes FUD or something, or they should not be allowed, or they should not be taken right off by some entity by offering them a very sophisticated derivatives transaction, and then they lose all their money. They will not realize. So that is the primary concern, maybe, when you are dealing with the Indian financial system. But in IFSC, you don't have to really give too much of concern to that. Of course, customer protection is, of course, it remains the most important pillar. But then here, you did, at least like you do not have to get into priority sector lending. Okay, because this is not a purpose. Purpose here is to focus on international financial services. So this was up to here. I have talked about FEMA and its interaction with IFSC and IFSCA. Now, we are actually going into the second half of the presentation, where I'm focusing this thing as a case study, that how the banking regulations are looking so different, how they are evolving, or how we are at IFSCA making the conscious effort to bring in international level or international approach to our regulations when it comes to business in IFSC. Just to emphasize the last point I was making. So I'll be getting into that, or do you want to take some questions here, or I'll be okay, or we'll be moving forward? So, okay, this is IFSCA, we know this. So what is the legal framework? On the top is the IFSCA Act. Then we have notifications in terms of IFSCA regulations, or there may be rules which may come under the Government of India. Okay, so the Act is passed by the Parliament, we know that. And all these notifications are given in the Gazette of the Government of India, whether the Extraordinary or the Ordinary Gazette of India. Now, we are now talking about, so for the time being now, I'll not be, say in every sentence, I'll not be using the word FEMA twice. So I am now completely coming out of FEMA, and here I'm talking like a banking regulator. So we are just focusing on banking business in IFSC as an example. So how did it start? It started after FEMA 339 notification or the regulation was brought in by the Reserve Bank under the FEMA Act. Then all these respective regulators in different financial services segments like insurance, IRDI, and securities market SEBI, all of them came out with their guidelines or directions as far as the business in those areas is concerned in IFSC. So here Reserve Bank of India's Department of Regulation, Department of Banking Regulation or whatever, it came out with a circular dated April 1, 2015, which was about setting up of IFSC banking units in IFSCs by Indian banks, and there was a separate schedule or section where it was which was dealing with the setting up of IBUs by foreign banks in India, foreign banks present in India. That is, as you may know, as you may be aware, this is slightly tricky, that most of the foreign banks which are present in India for more than 100 years also, like an HSBC, they're all under branch model. So HSBC Mumbai is not a separate subsidiary, but it is a branch of its parent bank, HSBC UK or maybe Hong Kong, maybe UK in Mumbai's case, or maybe I'm not sure. Let's just discount that part. So even only those foreign banks which were present in India already as a branch or a subsidiary, like there are one or two or three banks, foreign banks, which have set up a subsidiary, like State Bank of Mauritius is one of them. So anyway, so only those foreign banks which already had a presence in India in the form of a branch or subsidiary, they were also permitted to open one IBU as a branch. So these are the Reserve Bank's initial guidelines, and it told that for most regulatory purposes, an IFSC banking unit will be treated on par with a foreign branch of an Indian bank. So what is the status of the IFSC banking unit in the eyes of the Reserve Bank? Because these IBUs are branches of Indian banks, so they are treated as foreign branches of Indian bank, because IFSC is taken as a territory outside India under under FEMA 339, because these are non-resident entities. Okay, and so all prudential norms as applicable to overseas branches of Indian banks will be applicable also on IBUs. All transactions only in foreign currency, no cash, of course. There cannot be any cash transaction in IFSC in foreign currency. Then special rupee account is permitted only to carry out your administrative and other statutory expenses. So when an IBU is hiring the services, say it is making payment to its canteen supplier, which is of course maybe somebody in Gandhinagar or maybe even in GIFT or DTA, or so when they are making a payment, of course they will not be making a payment in dollar. So for those purposes, and even to pay the salaries of its staff, only for those purposes, it can have a special rupee account with an authorized dealer bank in India. So this authorized dealer is an authorized person under FEMA, if you can just go back to that. So for those purposes, you can use the special rupee account that is maintained with an authorized dealer bank in India. So you cannot be using, so you cannot have an IFSC banking unit in GIFT IFSC opening a rupee account. That's what I wanted to emphasize on. Then of course they are excluded from domestic call money market or any term money market, forex markets, money markets, and even the payment systems. So they cannot be making your UPI payments or whatever. Of course, dollar settlement is anyway not covered here so far at least. And then I talked about the need for a separate Nostro account. These are the initial guidelines. I'm giving this as a background so that we will be able to see that how we have moved then and where do we stand today. So the RBI guidelines continue. They had told that you have to bring the minimum capital of 20 million USD when you are trying to set up an IBU. Then of course these IBUs need not maintain the cash reserve ratios or statutory liquidity ratios with the Reserve Bank. Then there will be no lender of last resort kind of facility from the Reserve Bank. Now IFSCA is a regulator for banking in IFSC, but it is not at all like RBI, because RBI is also the central bank, the monetary authority for India. But there cannot be a separate monetary authority. There is no separate monetary authority because there is no separate currency in IFSC. So these are the important points which we need to understand. The RBI had given that you can raise funds from non-residents and overseas branches of Indian banks. So they had actually, in the beginning at least, they had prohibited that you cannot take dollar funds from your Mumbai branches or your parent bank. Okay. And then where the funds can be deployed by these IBUs, they were subject to provisions of FEMA. So with residents subject to provisions of FEMA, as well as non-residents other than individuals, they had told that you cannot give any loan, that is, to a retail customer in India. But you could give, this IBU could give a foreign currency ECB to a Tata or a Reliance in India. Are you getting? So that is how it is. That is how it was. Then there was no limit prescribed for raising short-term liabilities. LCR, NSFR was to be maintained on a standalone basis. I don't know how much jargon should I be using and how much of relevance it is for all the members in general, but these are the liquidity coverage ratios and net stable funding ratios. All these are actually very much banking specific regulatory ratios and parameters. And then derivatives, everything which could be settled in foreign currency. So even the non-deliverable forwards, NDFs as we call them, or non-deliverable derivative contracts, NDDCs in RBI's language, they were permitted on rupee. So you could have a rupee dollar product here on an exchange. Of course, Mayank is aware. But then all that has to be settled in foreign currency. You cannot settle it in rupees. That's how. And it should be listed on the recognized stock exchange in IFSC. So there was a need for approval for RBI if you wanted to offer some new products which are not permitted in general for Indian banks. And RBI's circular had not permitted the IBUs to open saving bank accounts. So, and it had permitted that you can open foreign currency accounts of units, the business entities or units operating in IFSC, and of non-resident institutional investors. FDs of tenor less than 1 year was also not permitted. Oh, okay, it was permitted. Less than 1 year from non-bank entities can repay prematurely without any time restrictions. I'll come because we need not go to all those things. So this was about the Reserve Bank's regulations, circulars, guidelines for banking, which came into effect from April 1, 2015, and they were in vogue. They were applicable till the IFSCA came out with its own separate set of regulations. After they were notified in November 2020. So why did IFSCA come out with separate banking regulations? What was the need? We'll come to that. So first thing is that what is the approach that we wanted to bring the International Financial Center kind of regulatory framework for banking in IFSC. So it need not be bound by Reserve Bank's own view or Reserve Bank's own mandate or the Reserve Bank's approach. So the IFSCA considered that let us go for principles-based approach rather than having a prescriptive, you can do this, you cannot do this, or rule-based approach. So broad principles that this is how you should conduct your banking business. We will not be telling you how exactly to do it, how much to do it. So that is one point. Then we had to, of course, IFSCA in the beginning, in the initial stages especially, had to balance the market development mandate in IFSC as well as balancing the regulatory part. So without compromising on the safety or the soundness of the system, the all transactions or the integrity of the financial transactions in IFSC, without compromising that, we had to focus on market development, that how the business can grow, how we can attract more business in IFSC from rest of the world. And what can be done from IFSC that is not possible from domestic India. That is the purpose. Of course, and then just like any other host regulatory body for which, like for SBI's New York branch, it is the Fed Reserve, which becomes the regulatory body, or say the OCC or whichever, or for that matter, for SBI UK, London, it is the PRA or the Bank of England. So they are the host regulator and the parent bank is under the home regulator of the Reserve Bank. Similar status is for IFSCA. As far as the business, the risk management part is concerned, it is still a branch. So the parent will be actually contributing, will be maintaining capital, will be providing the liquidity for the needs of the branch, just like any other foreign branch. And then the accounting standards, whether we should have separate accounting standards or we should have just like India. So all these were the issues that we were considering. Otherwise, unless we do something different, how it will be say a different banking business in IFSC. It will be same as SBI Mumbai is doing. That only can be done by SBI IFSC. That is what we wanted to come out of. So we made a transition to IFSC banking regulations in November 2020. Remember, only on 1st October 2020, actually the IFSCA assumed the powers of the Reserve Bank and other domestic regulators. Although the act was enacted in December 2019, and the authority also, IFSC had been set up in July, but in only from 1st October they took the powers. So we came somewhere in the last week of October, and first thing was that we had to address this, that we wanted to come out of this. So we we wanted to address some of the issues which were emanating from the Reserve Bank's guidelines about the banking business. So the IFSC banking regulations were notified in November 2020, which were broadly actually using the same framework which had been given by RBI, because we didn't want to cause any disruption, because the overhauling of the whole framework would take time. But in the beginning, we still wanted to address a few important points quickly. That's why within less than a month, less than 2 weeks, actually, we had given to the government of India, even after holding all discussions with the Reserve Bank and other board approvals at the IFSC level and the Ministry of Finance, and everyone moved quickly in a very coordinated way. And the idea was that we wanted to maintain the continuity till the entire wholesome changes could be made in the regulatory framework. And the new framework was to be benchmarked against the comparable global or regional IFSCs like Dubai, Singapore, London. Actually, Dubai is very easy for India to actually take over. But even we are not far from Singapore, or for that matter, at least in the regulatory framework part, even London serves as a good benchmark. Means even though it is, of course, traditionally over the centuries, it's such a developed financial center. But then at least the regulatory framework was benchmarked against these. So as of now, even under IFSC banking regulations, we have kept only branch model. So far we have not, although we are working on that, but so far it is still a branch that is permitted in IFSC. So it could be any bank anywhere in the world, including a bank in India under RBI's regulation. Only a regulated banking entity can open only a branch here in IFSC. Then we issued some directions, circulars, guidelines to iron out some of the obstacles which were being faced by these banking units in IFSC under the current regulatory framework. I don't want to go, but all these details, if you look at the IFSC website, you can actually go through chronologically that what all we did. So this was about the this thing. Now I have another presentation. Just give me a second. I want to come out of the exit this thing. Full screen. How do I come out of the full screen? I'm not actually very conversant with the Zoom. Actually, Zoom I have not used at all ever. But I'm trying to come out of, because I want to share another presentation on banking regulations guidelines, but then that I had kept only for the purpose if you want to go in more details of the IFSCA banking regulations. So can we, if I'm heard, can we now take some question answers, and then if required, if we still have time, then we can go to the details on the banking regulation of the present banking regulation. I'm suggesting this only because I'm finding some challenges in coming out of the full screen mode, because I want to share another presentation for the purpose. Just a moment. Yes, so this is about the IFSC banking regulations. Can someone, can Soumya, can you just confirm, acknowledge whether I'm being heard?
Yes.
Okay, thank you so much. Thank you so much. I don't know whether everyone has gone to sleep, or I thought, okay. So I'll just take you through, because I don't want to spend too much time here, because I want to leave sufficient time for Q&A. So this is just to give that how we are, what is the present banking regulation looking like. So as a major departure, what we did was, that even the initial capital requirement of 20 million, minimum capital requirement of 20 million under present IFSCA banking regulations, which were first notified on November 2020, then they were last amended in July 2021. Actually, the parent bank can maintain the capital because we made a big departure. Actually, this may be some sort of first in the world. I'm telling with some sort of suspicion or maybe some doubt, but I am telling you because I have interacted with a lot of global experts. But we were able to actually convince the IFSCA board and other stakeholders that there was no point in actually asking the branch to bring the capital in IFSC or the parent bank to actually park funds in IFSC or something, because so the capital anyway for the banking regulatory capital under Basel III has to be maintained by the parent bank as per its risk-weighted assets. So anyway, so the parent bank has to maintain even for the risk-weighted assets of the branch. So even this 20 million can be maintained by the parent bank at the parent bank level. So this is one important thing. And of course, the parent bank shall have to obtain a no objection letter from its home regulator. So any Indian bank which wants to set up a subsidiary or a branch or IBU in IFSC, it has to first obtain the clearance from RBI. Or for that matter, if HSBC has come here, they had to take it from HKMA, or in case of Stanchart, it is UK, PRA, or the Bank of England. And the parent bank shall have to submit an undertaking that it shall provide liquidity to its IFSC banking unit whenever needed for the operations of the IBU. So that's where, because IBU, we cannot afford to have a weak IBU here that may just default on its commitments. So it is a parent bank that will have to take the responsibility that if the IBU needs some liquidity, because it's all foreign currency liquidity, and there is no LOLR from IFSC or RBI, there cannot be anything by definition, because RBI cannot give USD because it doesn't print USD, isn't it? So this is thing. Another thing which we enabled was the representative offices also were allowed to be set up. So these rep offices cannot undertake any business, but they can just be here to promote their parent bank and other businesses. So this was another thing which we provided. The permitted businesses is one important area. Now, as I told you, when we were talking about FEMA, the Reserve Bank's powers under the Banking Regulation Act also have been given to IFSCA as far as the business in IFSC is concerned, the banking business in IFSC is concerned. So all the activities that are permitted for an Indian bank's branch under BR Act, all that can be done by IFSC entity IBU. But in addition, if an activity is not permitted under the BR Act, but it is covered under the IFSC Act, then all that activity also can be undertaken by the IBU. That is one big change, big enabling provision we brought. So this aircraft operating lease, say that is not a permitted financial product or financial service in India, but it is a permitted financial product or financial services in India. So that particular business can be undertaken by IBU here. Now it is a choice of the parent bank whether it wants to allow its branch to get into that or not. But as far as IFSC is concerned, any IBU can do any of the activities which are either under the BR Act or even under the IFSC Act, both. So it's a union of the two sets. And the INR business is again restricted. It can be only that business which with such persons, whether resident or otherwise, as may be specified by the authority. Now it is the IFSCA, subject to settlement of such transactions in freely convertible foreign currency. These are the permitted activities. Like any other bank, acceptance of deposits, borrowing from and lending to other IBUs, lending, retail, corporate, we have allowed everything. Cash transactions, it is still not permitted. Special rupee account for the purposes we discussed, that is still allowed, required, and a separate nostro account is still required. But when it comes to the nuts and bolts, the further nitty-gritties, we have permitted even the liquidity coverage ratio for an IBU. It shall be maintained on a standalone basis, but on case-to-case basis, the IFSCA may permit that the same can be maintained even at the parent level. But then we get the certification that it is being maintained on day-to-day basis. This is how we have given sort of flexibility for the business of IBU, because in the beginning, the IBUs cannot be saddled with all kinds of requirements that you have to maintain this, because if they are not earning anything, then they will be, it will be losing proposition. So in the beginning, at least, we are permitting them to use the liquidity buffers maintained at the parent bank level. Reserve requirements. This is one area where, because we permitted RBI, remember RBI had not permitted the IBUs to open a saving bank account, but IFSC banking regulations have permitted them that you can open a retail account, the retail customer's account, individual, including of a resident individual in India. But you have to maintain a separate retail deposit reserve ratio, because we do not have CRR. So something of that sort, the 3% that we have to, that IBU will have to maintain in IFSC itself. Now, coming back to this point about even an individual resident in India had been permitted under IFSC banking regulations back in November 2020 itself, that if you are qualifying on the net worth criteria, if you were a qualified resident individual, so your net worth was about certain $1 million or whatever, then you could, the IBU could open an account. It's another matter that the Reserve Bank had not yet permitted the individuals to send money under LRS, which was permitted only in February 2021. Of course, the discussions were going on. So this is the kind, because these regulations are meant for the world at large. It's an international center, we should not forget that. KYC norms, the IFSC is in the process of coming out with its, finalizing its different set of KYC norms within the PMLA provisions, and it is in discussion with the Department of Revenue, Ministry of Finance. But till that time, it is the Reserve Bank's directions that apply, and as far as KYC, AML, CFT is concerned. Now we have, after that, again, another departure, that to come out of the Reserve Bank directions or circulars which were adopted for IFSC also, we have now come out with banking handbook, where we are consolidated. We have consolidated all circulars, directions, guidelines applicable for banking business on IBUs. That has been consolidated in a one banking handbook, or is it called IFSC banking rule book? We are calling it handbook. It's like a compendium of all instructions related to their business. So there are three separate sets of directions. One, general directions. Another is conduct of business directions, and prudential directions. Here, I will not like to go in much detail here, because the banking handbook, just a flavor, I have given some sort of concept that what are the issues that are being covered here. What are the headers? So these handbook will cover everything about what is the licensing process, who is eligible, then what is the requirement in terms of that IBU, what kind of functions have to be maintained, and how the authorized individuals undertaking these controlled and designated functions like compliance function or the head of these IBUs, they have to be stationed at IFSC, and they have to be authorized by IFSCA. Then they have given the core principles, what will be the supervisory approach, and IFSC, the conduct of business rules, they emphasize on the client classification, a lot of emphasis, as we mentioned earlier, on client protection, especially the retail client. As far as the professional clients are concerned, they are supposed to know and they should be aware of the risks and rewards. So that is okay. But how the conduct of investment business will be carried out, how the conflicts of interest need to be addressed, the accepting deposits is covered under a separate module under the conduct of business rules. Rep office, OTC derivatives, the complaints handling and redressal mechanisms, AML, CFT has been discussed. And the prudential directions look after the other part, like prudential part, capital adequacy and the credit risk, market risk, operational risk, liquidity risk. So here in the prudential part, what we have done as of now is, because these are all the branches of their respective parent banks, so whatever home regulations are applicable on them as a branch of their parent bank, they will be required to comply with them, unless IFSCA has given some specific or separate set of guidelines or regulations. They are supposed to comply with them. That is the broad position we have taken under these banking handbook. So what I would suggest is that I may skip few of these slides, because these go a slightly more detailed one, because I don't know whether they will be that relevant here at this stage, but you can just have a look at it. I can share them because it's part of the presentation. But these are the kinds of things like when you talk of conduct of business. So how, only to tell that these are all the internationally benchmarked, the international flavor to regulatory framework, that communication with clients and financial promotions, fair, clear, not misleading, no avoidance of regulatory liability. Only a licensed entity may make a financial promotion in relation to regulatory entity. Things like this. Key information and client agreement, what should be coming. So everything which is expected in an international financial center, which will be understood very clearly by any entity, whichever part of the world it is coming from, to do business in IFSC, without getting into the nitty-gritties of the RBI kind of directions. So this is how the whole banking regulatory framework looks like. And it is completely oriented for the international outlook of the IFSC. AML CFT, again, these are, we had covered these, how the Basel III principles are generally applicable. This is what I wanted to share in terms of these two parts and the FEMA, and then to give you a flavor of the international regulatory framework for IFSC as far as banking is concerned. So banking business in IFSC is the first business we can take some credit here, where we have actually mostly oriented it towards completely away from the domestic regulatory setup. So thank you so much. With this, actually, I would like to stop my talk, and we can take maybe around, so we have more than 30 minutes for Q&A. I'll be happy to know your views. If there are any queries, I would be happy to actually discuss things with, because I am actually not at all promising, no regulator promises anything that I will be able to resolve the queries or something. But definitely we can discuss. This is the house where you can raise issues, and anybody should be able to intervene. I'm happy with that. So thank you so much. Thank you, Soumya. So I'm done with my part of the talk, at least the initial part. I cannot hear. I think you are on mute or. Mr. Mohil, I'm not able to hear you. I don't know whether others are able to.
Sir, can you hear me now?
Yes, I can hear you now.
Sir, just I'm coordinating with that path, and just within a moment we will be in touch.
No problem,
Otherwise,
no
I will
problem.
take care.
No problem. Take your time.
Just
please.
a moment, sir. Hello. Hello. Sir, we can take. Hello. Sir,
Yes,
are you
yes.
there? Sir, are you there? Sir, we can take the question answer round. And some
Yes.
questions are there.
Yes,
Rohan
please.
Thakkar has there's a question whether ECB provisions are applicable for the entity in IFSC, or the entity in IFSC can take loan from any country, say London or Germany. are there any regulation for obtaining ECB from any other country by the IFSC unit?
Okay, good question to begin with. I'm happy with that question because that is the now the short answer to the question is that no. As of now, there are no regulations or restrictions applicable on ECB taken by any entity in IFSC. So an IFSC entity can take any loan for anywhere in the world. No guidelines have been prescribed by IFSCA about the quantum of loan, about the end use of the loan, about the pricing, that it cannot be going beyond a LIBOR plus so and so. There is no restriction as of now for ECB taken by an entity in IFSC. Now, the second part, to elaborate a little further, the concept of ECB itself, ECB is actually external commercial borrowing. Now, external means what? External to India. So ECB concept actually relates to the entities which are in India, which are in India and which are taking some sort of borrowing from the world outside India, isn't it? So, but the entity that is sitting in IFSC, that is not an Indian entity in any case. It is a non-resident entity. So when it is taking any loan from anywhere in the world, including from any entity in IFSC, it is like a non-resident to non-resident transaction.
Yes.
So FEMA will not be even attracted. No FEMA provision will be attracted there.
Yes, sir.
So unless IFSCA, in consultation with the Government of India or the RBI, at some stage wants to bring some sort of a restriction or some sort of a provision or some regulation to that, there is no restriction as of now on ECB taken by an entity in IFSC.
Yes, sir. Sir, second question is from Pratik Vora. There is requirement of minimum capital net worth for setting up certain business in IFSC while operating through separate entity model. If the shareholder of such entity are resident and amount of capital increases, amount permissible under LRS, do they need to obtain approval from IFSCA, RBI for FDI?
Okay, so if I got this question correctly, then the question is that when a resident individual is setting up an entity in IFSC, it is making some remittance under LRS for so ODI under LRS. So they are sending some money to set up an entity in IFSC, and the $250,000 limit under LRS will be applicable on them. Per annum, they can send only that much. Now that limit on the resident individual will be applicable even in the case of IFSC, because as it is applicable for the rest of the world. So it is the Reserve Bank of India which will have to permit anything which is beyond that permitted LRS limit. IFSCA cannot have any jurisdiction on that.
Okay, sir. Got your point, sir. If then Vihangi Shah, if IBU is receiving the amount from non-resident, then there is still barred of 15 days limit of unutilization or investment.
I'm sorry, Mr. Mohil, can you just repeat the first part? If the IBU is receiving?
If IBU is receiving the amount from non-resident, then there is still be barred of 15 days limit of utilization investment.
No, because this entire condition or this restriction of 15 days is applicable on LRS, and that is a scheme only applicable on resident individuals.
Okay.
So in case of non-resident, there is no question of any such this thing. So there is no limit, no condition whatsoever for non-residents remitting money here.
Okay. Then the Ansu Jithalia, the question is that a company have negative net worth, can it invest in WS outside India?
Now, a company, if it is, what is the business of the company?
Probably we take it as a finance only, or it's
so then, as of in the present regulations, if an entity does not have a 3-year profitability track record, then it doesn't qualify under the automatic route.
Okay.
So it will be able to make ODI in financial services abroad, including in IFSC, only with a specific approval from the Reserve Bank of India. That is the current position.
Okay. Then there one question is from Nanandgi, that there is digital banking concept in this year's budget, 75 digital banks to be set up. Has RBI come up with the regulations for such banking units? Are there separate regulation for digital banking units in IFSC, or will it be upcoming by RBI or IFSC?
Yes, so a good question, because yes, there is this big buzz going around about digital banking. Now there are two parts to the question. The part which relates to domestic India, so whether separate digital banks are required to be set up in India, that will be in the domain of the Reserve Bank of India. Whether there is a need for separate licensing, that is all up to the Reserve Bank of India. So IFSCA can issue licenses for digital banking or any other type of banking only in IFSC. So from IFSCA side, we can say that we are working on the regulatory framework for the company model of IBUs. That is, when instead of branches, when anybody can set up or can incorporate at a banking company separately in IFSC. So under that model, we will also try to address we'll keep a separate schedule in a suitable, we are still discussing the whole idea that how it will be applicable. But IFSCA definitely is looking at giving some, making some provision for a separate digital banking licensing regime. Because practically speaking, as on date, all banking is actually in IFSC at least is all digital only, because there is no customer interface, there is no currency note, there is no ATM, nobody is actually going. So all these services are being done through digital channels only. So essentially, they're all digital banking only. But even we are examining the different models used in different parts of the world. We are looking at Singapore, or for that matter, even Dubai and Abu Dhabi, that what is it they are trying to address. Malaysia has done something, even some European countries, Germany. There are very different kinds of models and approaches for digital banking licensing. So IFSC definitely is examining it. I cannot say anything on behalf of the Reserve Bank in this regard.
So get your point, sir. So then another is Vihangi Shah. If resident is having account in IBU and getting investment amount from non-resident in that account, whether there is still 15-day limit for it? No, that's, I think we already covered this one. And then, does Indian entity to need to take permission from RBI, FEMA to get their share listed at GIFT IFSC exchange as permissible from time to time?
No, because RBI is not the agency. RBI is not the regulator for listing. So listing will be under SEBI or under the Companies Act or whatever. Because if an Indian entity wants to list its securities in a foreign exchange, a stock exchange in a foreign country, so including IFSC stock exchanges, then it has to follow that process. But Reserve Bank has not, so it is a sectoral regulator. So if Indian company law or the MCA or SEBI rules and regulations provide that an entity can list its securities, and which is already allowed, we have already seen a lot of debt instruments being listed on IFSC exchanges. It is sometimes secondary listing, it is a joint listing also, a stock exchange in Europe and as well as in IFSC. SBI has listed, Axis Bank has listed its green bonds. So there are a lot of listings already that are taking place. But RBI will not have anything to do on that. It is under FEMA, it is permitted.
And so they have to take permission from concerns, means.
Yes, exactly.
So, okay. Then the another question is from Dipen Shah. Sir, what are the regulations applicable for if domestic parent company planning to set up the global treasury management company as WOS in IFSC and take ECB from IFSC and or from other country for India and global operation, So what are rules, regulations trigger for their treasury management company in IFSC?
Okay, so this treasury management company, we have actually come out, IFSCA has come out with a separate framework, global stroke regional corporate treasury centers. So they can look at that. So Mr. Dipen Shah can look at that framework, and now the question is about whether they can open. They can open. An Indian parent company can set up, like any other entity, can set up a global treasury center in India, in IFSC, sorry, in IFSC. Now, what is it under FEMA that is stopping? Nothing is stopping them. Because even today, Reliance or big companies, they have set up their treasury operations, centralized treasury operations in Mauritius, in Singapore. So we want to actually attract those businesses to IFSC. So it is permitted. And once it is set up here, then these entities can do business with any other entity across the world. They can borrow funds, that is anyway permitted.
Then one more question from Vihangi Shah. If IFSC company issues share warrants to investor and final the investment amount based on the day valuation, that day valuation, and if at the time of actual investment valuation of the company gets changed, they can investor remit the investment on old pre-determined rate.
Now, I think whether it is about ODI, that a resident is trying to make an investment in IFSC entity.
Yeah, what just I repeat it again. Why if IFSC company issues share warrants to investor and final the investment amount based on that day. So what they meant to say, they issue the share warrants and final the investment amount based on that day valuation. And if at the time of actual investment valuation of the company, it gets changed, they can investor can remit the investment at old predetermined rate. What it means to that? Two dates, date of allotment and date of payment. If they are different and valuations also come different, then how is this situation supposed to be taken?
But it is very simple. It is, first thing is that this part, that how the valuation and how this will be dealt with, this will be under the respective law. If it is the Companies Act,
okay,
because it's an IFSC entity, if it is a separate incorporated entity, it is still a company enacted under Indian company law, 2013, Companies Act 2013.
Yeah.
So this will be governed by those provisions. First thing is that.
Okay.
Right. And then the investor part, if the investor is, whether it's a resident investor or it is somewhere outside India, that also will not make a difference, except for the fact that what a resident can send.
Okay.
That will be governed by the respective FEMA regulation.
FEMA regulations. Okay. Then one is that Adish Jani, can a entity in domestic area procure ECB finance for business within domestic area from bank located in IFSC?
Yes. Yes. A domestic company in India can raise ECB, foreign currency ECB, that is only in foreign currency, from a bank located, that is IBU in IFSC. Now, one important point here, because under FEMA ECB rules, this is permitted that foreign branches of Indian banks can provide foreign currency ECB, but they cannot provide rupee ECB.
Rupees.
Because otherwise the foreign banks, like foreign banks, not the branches of Indian banks, foreign banks can even provide ECB denominated in rupees, which is not permitted for an IBU or any foreign branch. But to answer the question, yes, that is permitted.
Permitted. Okay. And then one more question. Stock exchange in IFSC is regulated by SEBI or home country regulations or IFSC authority? We think we already replied.
Yes, it is IFSC authorities regulations on stock exchanges. because initially they were set up under SEBI's regulations. So what has happened, either IFSCA has come out with its own regulations now, the financial market infrastructure regulations. So they are now replacing the erstwhile SEBI regulations. So the two stock exchanges, when they were formed in IFSC, at the time IFSCA was not in existence. So they were set up under SEBI's regulations. But subsequently, the IFSC has come out with its own regulatory guidelines or circulars or directions. So in those areas, it is the IFSC guideline that will apply. In some areas where IFSC has not yet replaced SEBI's guidelines, they still may remain. That's how it is.
Governed by that.
Sir, sorry to interrupt you. I had one question, I think, which has also been raised by Dhairya Chaniara. Sir, if you look at the IFSC regulations, Regulation 3 states that any financial institution or branch set up in IFSC shall be treated as a person resident outside India. But that regulation does not talk about any other ancillary service provider. So what would be their status?
Now see what is permitted here is that any entity that is set up under the IFSCA, right? So what is permitted in IFSC? First thing is this. What is permitted in IFSC? It is either has to be a financial service provision, right? Now, if IFSCA for development of the financial services ecosystem has permitted an ancillary type of entity also that facilitates or that supports the provision of financial services, then these are taken as ancillary this thing. But any entity that is set up in IFSC, that will be taken as the entity in IFSC and it will be treated as non-resident entity only. Whether it is regulated under certain regulations by IFSCA or it is simply registered, because only with IFSCA's permission an entity may be set up in IFSC.
Right.
So they will all be treated, the residential status of all these entities, including the ancillary services, that will be non-resident entities. Now, because when I'm using the word ancillary, I'm talking of the way IFSCA has defined ancillary services in its ancillary services framework.
Right.
But I'm not talking about, say, if tomorrow a restaurant was to come up, okay, or a hotel is operating here. Okay, so even these are services, but then of course these are not at all services which will be under IFSC. Okay, so they may not be treated as non-residents.
Right.
That is what I wanted to. Yes.
So basically all chartered accountants, lawyers, which are, I would say, in some ways defined as ancillary by FEMA, they, when they set up a unit in IFSC, they will be treated as a non-resident, a person resident outside India. Correct?
Yes, definitely. That is very clear.
Okay. Because Regulation 3, if you look at it, sir, it only uses the word offshore banking unit or financial institution. It does not talk about ancillary service provider. Regulation 3 of IFSC, Regulation 2015.
Yeah, so FEMA 339, it's a very good point actually, Soumya, because we had debated this when we were thinking about say allowing ancillary services. So FEMA 339 remains the governing regulation as on date.
Right.
But I may not be able to share many more details, but we have taken this up in general. This is one of the points, but we have taken it up at the highest level, that how we need to actually even amend FEMA 339, or for that matter, we may have to make some changes even in the FEMA Act.
Understood.
So that there is a lot of clarity about the legal aspects. Because when it was set up like that, you are right, FEMA 339, at that time, nobody had thought that you may need an accounting firm, an audit firm.
Correct.
Okay, in IFSCA. So that has to also have the same status.
Right.
So in practice, everything is understood. And there is a lot of understanding when people are dealing with it, but we are trying to actually bring the legal position also in without any ambiguity. So we are in the process. That's a very good point. I understand that.
Understood. Thank you.
Sir, okay. So one more query from Sandeep Khandelwal. Whether company to be incorporated in IFSC shall be regulated by Companies Act or 2013, or they are free to domicile themselves in any country and get regulated by them?
No. an entity in IFSC will have to be incorporated in IFSC under the Companies Act
Is that
2013. So it is an India domiciled company
company?
in GIFT IFSC.
Okay.
Now it can set up its subsidiaries anywhere in the world,
Okay.
but then its character will remain of an Indian company set up under Indian company law.
Hmm. So basically, they have to be set up under Companies Act only.
Yes,
They
yes.
can then okay. So what one more question from that? How would be able to trace the amendments, new regulations done by IFSCA? Mean what are the exact source of getting those updates? What they mean so the time to time update from that IFSC, and she also means also thank for our digital reply on that digital banking. So question is that how they can get the updates and what is the reliable source about that?
Very good question. I'm happy that people are already expecting this, that people who are talking about digital banking license, they should be really more updated on the digital platforms. So IFSC, you may follow IFSCA on Twitter, on Ku, on Facebook, and you will find updated status of all kinds of communication. You may visit IFSCA website. We try to give out, actually we are in the process of revamping it, making it even more user friendly. But you look on the legal section, you go to circulars or regulations and all, it is not in a very good this thing. Personally speaking, I had given a few inputs from my side at least, but you can definitely follow the IFSCA on Twitter and all to get all updates.
Update. And
Yes.
I think they can get latest amendment or latest update on Twitter, etc.
Exactly. Yes. If
And
it is, yeah, if there is any such issue, I'm telling you, IFSCA IT team will be very happy to get a feedback because they are trying to actually ramp up their digital presence.
so, sir, what I understood, that even they can raise the questions on that Twitter itself also. So
Yes, because that's what means. There is no harm. At least I would also like to see how our IT team is responding, because it's one thing to be on Twitter and keep giving news, but then are they responsive? Because I would like to know the feedback from the market if there is a query raised, how it is dealt with.
yeah,
But
since
we are
it's
taking pride in that we would like to be responsive through all these media.
and what I think, sir, it's a more informal, so that reply also supposed to be very fast.
That's how we want to be different. Yes, we want to be different. We don't want to be again giving a regulator like answer, because if there's a
That,
query, yes, definitely.
so that will be that may take time, but here he get little bit idea about the questions. So
Yes.
sometimes it's not a so simple question. Sometimes it may be little tricky. But if so simple is, they can means even just refer the Twitter or raise the question on Twitter. So get very fast answer there. What I think.
Exactly. There should be some response to that question. If it involves some more time, then okay, that also should be conveyed. But there should be response to anything that is coming as a comment or as a query or as a question on Twitter or any other Facebook or anywhere else. And we should be responsive. IFSCA would like to actually present itself as some different type of regulator where we are responsive, irrespective of the media. In fact, on these platforms, even more so.
Okay, just a minute. They have already we have replied the theory question. Then the one is from Mayank Jain. Generally, under ODI regulation, remittance by Indian parties should be made as per the valuation report applicable at the time of remittance. However, can India resident remit money on predetermined price, which may vary from the recent valuations report company? I think we have already covered, and it's a
Same question.
different issue.
Same question.
Okay, it's covered by other agencies. No?
Yes.
Okay.
Because FEMA ODI rules are applicable to resident entities when they are making remittances. Whether it is to Singapore or to GIFT IFSC, it is the same.
So then it's a will that what today only new news was running that Avenue Supermarket shall set up store in IFSC.
Yeah, DMart.
Will it be treated as a PRO?
That sir, I think has already answered that won't be considered as.
Yeah.
So that's what that will not be a person resident
Yeah.
outside India.
Yeah.
Correct.
And then
So one more question I think which has been raised, which is skipped, is that this restriction of 15 days, is it applicable for money which was received from outside India in IBU bank maintained by an Indian resident?
No, if that Indian resident is making a remittance from his account outside India, then it is not a remittance from India.
Correct.
So this will not be applicable on that.
Understood.
LRS is about remittance from India,
Right.
where you will be actually converting your rupees into foreign exchange.
Hmm.
So what already is in foreign exchange under your this thing, that will be not subject to these limits or restrictions.
Understood. One question, sir, on NBFC is that if an NBFC has opened a branch in IFSC, so there's a company in say normal regulations, normal territory, and you have a branch in IFSC, whether the consolidated requirement, the minimum net owned funds, all the limits we have to see at the IFSC level, or it has to be seen at the HO level, I mean at the consolidated level. That is one of the questions raised by participant.
Yeah, but the finance company regulations have addressed that.
Okay.
So minimum owned funds requirement and everything, no, it has been very clearly laid out that it will be at the finance company level here. So a branch of an NBFC in India will be a finance unit.
Okay.
So in fact, there are circulars also, which I would refer if there is any problem, I can share that exact link. We have addressed this as in the form of a separate circular, that when we are talking about a finance unit, how we will calculate the minimum owned funds.
Understood. So basically, it is applicable at the IFC level itself, not at the HO level, kind of.
No. Because there is slight deviation as of now, because in banking regulations, we have addressed that. So these capital for even IBU can be kept at the parent level.
Understood.
But for finance company, finance unit, we will be trying to converge all such principles, irrespective of the form of the entity. But as of now, we are going one step at a time. So for finance unit, that is a branch of an NBFC, it will be at the finance unit level in IFSC.
Understood. And a follow-up to that question is that will that finance unit be allowed to lend to offshore and India, back to India, okay, or even if the funds are say coming from the HO or coming from the Indian company, look at Indian NBFC.
Yes, so that finance unit, because it will be a branch of NBFC in India, first thing is this. So it can undertake the operations which are permitted under the regulations of the Reserve Bank, which are applicable on the branch of the NBFC. Right, as of now, actually under the Reserve Bank guidelines, it is not permitting NBFCs to set up foreign branches. The problem is that.
Correct.
So we don't have to actually deal in these issues. Till we are taking up with the Reserve Bank that there is a strong case that they should permit the NBFCs to participate, at least the stronger NBFCs. So that is also going on, but theoretically, because when we in IFSC, when we make a regulation, it is for the whole world.
Understood.
Yes.
okay.
I think most of the questions are addressed. Mohit sir, you want
Yes, sir.
then is a question?
I think most of the questions are answered. And just I'm thinking that some questions are either repeated or duplicate. So I'm just let me see if any left. All can an entity in domestic area procure ECB finance for business within domestic area from bank located in IFC? We have already
We have answered that. Foreign currency ECB can be given by IBUs to Indian entities.
I think there is one question from Deepen. He wants to ask a question. Deepen, you can go ahead and ask your question. he's on mute, he's not able to unmute.
Sir, I think we have almost covered all the questions, or we tried our best to cover as much as possible. Still, we think, sir, we try to get in touch with you if you get some queries. So
Sure. You can email. You can send the email giving the queries. No problem. I understand this. That such a
Sir, sorry to
yes.
interrupt you. Thank you so much,
yes,
sir. Sir, to just a follow-up question on the MBFC unit, as is, it is already mentioned in the Financial Institute that IFSC Authority Act that it can be permitted a transaction like a specified transaction for activity and for activities. So, like a finance unit, if I do have the MBFC and I am opening the unit in the IFSC, whether that particular unit can lend the offshore plus India locations, or it will be only allowed to lend a lending activity, which is a part of the core activities under that permitted transactions. So whether I need to look at one RBI domestic regulatory, or the I as a finance unit, I can do this particular business by looking the IFSC Authority Act, which has been allowed to permit this transactions to lend the uh, as a core activities.
Yes, I understand the question. Question is actually deep, and it's very important also. This is good that you actually, Ms. Soumya told you to actually unmute. This is a very important aspect. Now, what Dipen has told here is that IFSCA Act and IFSCA regulations, finance company regulations, which are applicable on finance unit, they permit them to undertake core or non-core activities. Now, lending is a core activity, so a finance unit can even lend to anybody outside India or in India or whoever. Now, it is from the IFSCA side. Now, because this finance unit, if it is a finance unit, it has to be a branch of a regulated financial institution or an NBFC in India. Now, because that NBFC, the parent NBFC, is under RBI's regulations, so RBI's regulations may be prescribing what its branch or a foreign branch can or cannot do. So that is what would limit them, not IFSC's regulations. Are you getting? So this is an area which perhaps, as I was telling, no, things are in flux. Actually, this is why now I'm going to the second level, that this is a very important point, that it's very easy so far that we maintain this position. But then how do we operationalize things? If everything will be stopped, then how do things happen? Now we have to legally, we have to see that what are the powers, the transfer of powers from RBI to IFSCA. What does that mean? What is the coverage of that power? Can it not go and tell, no, for IFSC business of even an Indian entity, even that those powers should be given to IFSCA. I'm just giving a very personal view, and this is where the disclaimer and the caveat should actually be remembered and underlined.
Absolutely.
Right. So this is a conceptual thing which I thought that people like you could understand, and I am very happy that the discussion went to that level. So this is where we are. As of now, this is the position. Because if the parent bank's regulator is not permitting its foreign branch to do something, it cannot do. And there is hardly anything which I can do. Like Mauritius, right, for that matter, like MAS, Monetary Authority of Singapore, it allows all kinds of things to be done by all banks in the world. Everyone else is doing something. But if SBI Singapore is stopped, because it's a foreign branch of SBI, which is under RBI's regulations, and RBI regulations don't permit that, no, even your foreign branch should not be doing this.
Correct.
Then you cannot do. So you lose out business.
Understood.
So maybe we understand, maybe through the understanding of the risks, that what are the risks, what are the concerns, whether we can address them. So we move like that. That's how it is.
Thank you, sir. So I think we have reached to the end of the session. I think you have answered most of the questions very satisfactorily, sir. And based on today's session, I think everyone has become quite enriched in at least understanding the FEMA regulations or the banking regulations which are operating in IFSC. With this, I request Parth to propose a hearty and well-deserved vote of thanks. Over to you, Parth. Parth is there.
No, I think Parth is not there.
Okay.
Before Parth can come in, Soumya, I am taking this liberty. I just saw a question flashing. Somebody
Okay.
asked, I think Sandeep asked that Khandelwal,
Mhm.
that whether a trades platform can operate from IFSC.
Okay.
Now, I would like to answer that question before
Sure,
we
sir,
complete.
sure.
So,
Yes, sir.
because this is another very interesting innovation or development which we have undertaken at IFSCA. I'm personally very happy with that because I am involved in that. You please look out for ITFS platform framework, International Trade Finance Services Platform, ITFS. This is like trades on for international trade. We have almost replicated the trades kind of this thing for IFSC, and it will be like not just Indian domestic this thing, but it will be across the world, anywhere from anywhere. This is one ambitious framework which we have laid out, and we have put it in regulatory sandbox for first 6 months. We have already given licenses to 4 entities. They include all the entities which are operating the trades platform and a new fintech entity as well. For first 6 months, they will be setting up the operations and the technology, and in the sandbox approach, we'll see how it is working. And then we will be maybe exiting with success or something. So because Sandeep Khandelwal showed interest, I wanted to point it out that he can look at the ITFS platform framework on IFSC website.
Okay. Understood.
So, Soumya, can we conclude?
Yes.
Oh yes,
well,
I'll be happy.
Yeah, you can take.
We are
couple of
overlapping.
minutes.
Yeah, over. So, sir, I will like to take the privilege of vote of thanks, sir. It's great honor, sir, and privilege to have today you, sir. Sir, you are one of the top-notch faculty on this FEMA implication on Gift City, and sir, you have covered. And sir, first of that, sir, you have even from your busy schedules, you have managed the time and enrich us with almost all nitty-gritty and that to this emerging opportunity. And I say, and here after attending your yesterday's session of Sandeep ji Shah and your session, sir, I have confession to make. After end of this series, sir, I foresee within a short span of time, good number of practicing chartered accountants seize this opportunity and give their valuable contribution to the vision of Prime Minister making India Atmanirbhar Bharat. Sir, and for that, also I wish to take the opportunity to express thanks to our own Ahmedabad branch chairman, Sri Harit Dhariwalji and management committee who thought out this year, organizing wonderful programs and these new age programs. And more especially for young practicing chartered accountants and practicing chartered accountants who looking to expand their areas of practice. I think in Gift Cities is the most good opportunities, and I think they get a very wonderful opportunity. Yes, it's and on behalf of participants, I can say that the number of chartered accountants will seize this opportunity and give their valuable contribution on that. Thank you, participants, for your active participation. Hope to see you all again tomorrow at the same time. Thank you, sir. Thank you, sir.
Thank you so much. Thank you. Thanks again to the chairman, WIRC Ahmedabad branch, Soumya, and all the colleagues who joined. It was a pleasure and honor to actually have this session or be present in this session. And I look forward to more interaction and your queries and everything. You can share the email IDs. We will be happy to actually engage. And it was wonderful opportunity for me in the first place. Let's hope that, of course, because I believe that it's a national project. It's a project of national importance, and ICAI members do play a very important role here because in creating awareness, understanding about these things, because you stand at the frontier that people want. So this is, I believe that this was very useful from my perspective as well. Thank you so much. Thanks once again. I enjoyed
Thank you,
it.
sir.
Thank you, sir. And we have closed on a triple century, sir. We are more
Oh,
than
yes.
300.
More than 300 participants are almost all are actives, and we can see that still they are more than 200s are there.
Yeah, we have overshot the time for the
Yeah,
number of
that's the
viewers.
issue.
So thank you so much. Thanks a lot.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
Bye bye.
Bye.